I've been getting a lot of questions over the last week about LLPAs, loan level pricing adjustments, and the new changes that have been in the media, and they've been all over the place. People have been reading articles on it, and they've been calling me with questions that in all reality, they just don't make sense. You're never going to get a better loan because you have a lower credit score. That's not what's going on here. And you don't want to ever do anything to hurt your credit scores, because if you do something to hurt your credit scores, it's going to affect your ability to qualify for a mortgage, and it's going to make it so qualifying for a mortgage, it's just going to cost you a lot more, because you'll never get the same loan if you're an A+ borrower from a credit score standpoint or a C- borrower. The C- borrower is always going to be riskier and therefore come with higher interest rates or higher fees. Loan level pricing adjustments, LLPAs, they adjust the cost of a loan based on the specifics of each loan, and they've been around forever. They take into account credit scores, down payment amount, debt to income ratios. They factor all these different things in, and then they base adjustments to that loan based on the risk associated with that particular borrower. These LLPAs have been around and they've been changing over the years, but this most recent change that's coming into play May 1st, this change has been getting a lot of attention. These changes aren't hurting you if you have a good credit score and good credit history. All they're doing is reducing the gap between a lower FICO score borrower and a higher FICO score borrower. What they're trying to do is make it so that we can have affordable housing options even when you've got lower credit scores. They're trying to make it so buying a home is affordable and you're not going to get crushed with additional costs and rate hikes because of a lower FICO score, at least not to the extent that you were getting hit in the past. In order for these new changes to take place with the higher FICO score borrower, they're going to have a debt to income ratio over 40%. So the higher credit score borrowers do take hits when the debt to income ratio is over 40% and when their loan to value is over 65%. So not every A+ credit borrower is going to have the same hits, and some aren't going to take any hits at all as a result of these new changes. First-time home buyers. If you haven't owned a home for 3 or more years, you're considered a first-time home buyer. And guess what? None of these changes apply when you're a first-time home buyer. They're trying to make it affordable for you to buy a home. So if you're a first-time home buyer, you don't even need to worry about the changes that are coming into play because they're not going to affect you. The goal of these changes is not to negatively affect good credit borrowers. The goal of these changes is to promote affordable housing so that more people can buy a house and stop renting. That's the goal, and I think these changes are going to take some positive steps towards achieving that goal. If you want to purchase a home, or if you already own a home and you're interested in refinancing and tapping into your equity or debt consolidation or whatever the case may be, if you have any home financing questions, or if you'd like to map out a game plan to purchase a home down the road in 3 months, 6 months, or even in 12 months, call my office. I'll get you with one of my experienced mortgage professionals. We'll get all the information, we'll gather all the documentation, and we'll map out a strategy for you to achieve your goal.